Hello, everybody. We are now on UNCHAIN CEE Fintech Tour. This is a series of events that are bringing in the spotlight each and every country in the CEE region. Through this, we're trying to actually take a closer look at the finance, banking, and fintech ecosystem from each country from Central and Eastern Europe. Now we're on a panel focused specifically on the Romanian fintech ecosystem, and we have with us Carmen Sebe, managing partner and president of the board of directors at Seedblink, together with other interesting panelists from EcoFinance, Lendox, Dash, and Bankata. But I'll let Carmen take over from here and lead the discussion. Hello, Carmen.
Hello, very nice meeting you, and also all my colleagues that will be with me in this very interesting panel about the growth experience in the digital lending ecosystem, which is I'm sure of interest for a lot of people in Romania and around us. So I have today with me Rucsandra Stanciu from EcoFinance, Cosmin Curticapean from Lendox, Catalin from Dash, and Seredenciuc from Bankata. This being said, I would like to give a moment each of them to present them and the companies so that we can pinpoint where they are actually in our ecosystem. So, who's going to start?
I'll start. Hi,
okay, super. Hi.
Nice to see you here and happy to be here. So I'm Rucsandra. I represent EcoFinance. I'm Group CEO for this company. A bit about EcoFinance. We actually have 10 years already since the group started, and since 2017 in Romania. We are a fintech and we operate in the lending business right now, mostly towards private individuals and all features around that. So that's a very small intro from my side on EcoFinance.
Okay. Catalin?
Hi, my name is Catalin Rus. I'm a co-founder and CEO at Dash. Dash is a Romanian fintech started here. Initially as a data analytics platform for small and mid-sized enterprises to understand financial behavior and decision-making into these small companies. But recently, we pivoted in embedded lending space, especially to empower fast-moving consumer goods companies to disburse, to provide access to microloans for their retailers. And we do it through a partnership which we have with MasterCard and through the issuing of the credit cards in a very innovative way. Thank you.
Hi everyone, I'll go next. I'm the CEO and co-founder of Bankata. Bankata is a fintech, 100% Romanian fintech, and we help users better manage their money, understand their financial needs, and find the right product suited for them. We do this through an online platform where we actually compare and aggregate the entire market and show the user all the products available to them, but also through an app which helps them better manage their budget and automatically categorizes and shows all the transactions he's had, both incoming and outgoing, for the past year.
Super, thank you. And then is Cosmin, if you can tell us what.
Hello,
okay.
Can you hear me?
Yeah, we do.
Hello everyone. Thanks for having us into this event. I'm the CEO of Lendox. We are a service as a software technology. We are selling a SaaS product to banks and other lenders in order to accelerate their analytical requirements in underwriting and the KYC. Of our secret sauce lies in the fact that we are able to capture and identify the capability of reimbursement of the companies through alternative data sourced from social media, digital footprint, from banking and many other sources.
Super, thank you very much. So as I've told you, you've got interesting people in this panel. So let's start discussing. From what I have seen, digital lending platform market is projected to grow from 20 billion USD in 25 to 131 billion by 34, with a compound annual growth rate of 22%, which is very much. Now, being a market that is growing so fast and so it's a big market, how was this digital lending transformed in the recent years so that can sustain this growth? What's making it so valuable? Catalin, can you start? Or?
Yes, thank you very much. I would say first, the very important step is that more and more banks at this point started to adopt technology. So they look at, let's say, in the lending process, from the onboarding up to financial risk assessment, there were certain processes that have been done manual by any bank in this world. So now what they did, they start to automate certain aspects. For example, PrimeDash came 2 years ago and start to optimize the financial risk assessment process by decreasing 8 times the time that the bank spent in the financial risk assessment only by implementing our technology. This is, I would say, a first adoption. Then also financial institutions started to adopt new, as also Cosmin provide, new alternative data in order, but to do it digital and to start to look at different type of data sets. I think this is one of the key that helped this market to accelerate a lot. And more and more, we see more and more players at this point. Mostly, I would say, second-tier financial institution, not the big ones, but second-tier financial institution, which are adopting technology faster and creating more automated process in a much faster way at this point.
Okay. Because we are discussing. Yeah. Go ahead.
I just wanted to say that I heard the numbers that you said, and I think it's that CAGR. It's a bit optimistic in my opinion, especially because working with the credit risk, and especially in Europe, having quite a regulated and very heavily compliant market, it's very difficult to actually capture more lending into the to at least in terms of corporate lending, and one of the reasons being that banks have to always deploy the deponent's money. So we are talking here about the citizens' savings. That will always be kind of a burden. So I would be more than happy that if that thing would actually come through. But well, I think indeed that Catalin pointed very well, the digitalization and automation of processes and all the shifts that are happening now with the highest speed since the Industrial Revolution to today will of course also open new market.
I would like to because we are talking about Romania, how is this applied to our country? As in, are the changes in the same direction as in moving towards a very digitalized lending transformation, let's say, in our country?
I don't know if Romania is different. I don't know if the changes apply. What I know from PrimeDash perspective and in the industry that work is that the need of this capital, it's global. So it's not, Romania is not different market. It's the same market happens in Europe. We operate mostly in Middle East and Asia, so the need is the same. There is, I think, one of the key element was that most of the banks, because most of the banks, the onboarding process and the full application process and the disbursement and all this requires it requires a certain cost from the bank from the financial institutions to process. By saying that, most of the financial institutions didn't look where is the big need, and the big need is on SME space. And I'm mostly talking from, maybe because I'm biased a little bit, but the micro lending was a problem, and the need of capital usually happens at the SME space, which basically are driving any economy in any country. But due to the fact that the micro loan is extremely expensive and doesn't make sense for most of the banks, they don't look at that industry. Now, what we are proud at Prime Dash to do, we kind of challenge that status quo, and we show to banks that there is a way to approach this micro lending, which it's a huge opportunity in funding, untapped right now, by digitalizing and being there and looking at these clients from a different perspective. Yes, it's a highly regulated market, definitely from the risk perspective, but we successfully start to challenge the status quo with some banks in Europe, and then also in Middle East, and with some global players. And I see a new trend that probably will bring a big shift in the next 2-3 years.
Okay, thank you.
I also believe that the need is the same everywhere, not just in Romania or in Europe or in the US. The bank's popularity has been decreasing for many years now, and I think the financial institutions, especially the large ones, already realize that time is money, because to do things faster, digital, and if you are able to provide the customer, whether it's an SME or a civilian or a natural person, if you provide them a answer and approval of the loan faster, then the rate doesn't matter as much, because if the customer has to decide whether he'll take a loan with 6% now or wait 6-7 weeks to be able to be approved for a loan with, I don't know, 4%, he's going to take the 6 now, because and banks have realized this, and it's about making money, it's about being fast, and it's about implementing new solutions that help them give the customer an answer for the loan even faster than they've done before. And this shift has already happened with natural persons, and you are able to get a loan or get an answer for a personal loan within a couple of hours from your application, or even instantly with certain banks. And the next shift is probably going to go towards SMEs.
So that's my next question would have been, and it still is, what is the difference between online lending and traditional banking? And I think that a part of it is what you have said, that it's quicker, for example. Are there any other difference? Yeah.
It's not just that it's quicker, it's also, sorry.
Yeah, go ahead.
It also involves a lot less, it's quicker, it's digital, and it involves a lot less people working for that loan in the bank. So it's going to be a lot cheaper for the bank as well.
I'd like to chip in and actually cover also the previous question and this one too. We are used to debating this kind of discussions, being constrained by time, about banks being like in a very simplistic way. You know, we talk about banks understanding, banks realizing, banks that. In fact, the banks are extremely complex animals, and basically, what I want to say by that is that always the people in the bank, they kind of understand what's going on, but then the process is, in order to adopt different technologies, in order to actually have the mentality of shifting from one paradigm to another. It's extremely slow, and that comes from the legacies of the banks, how they were actually built.
We can't compare.
So what? So what I want to say is that with this is that basically you have the banks. Look, I was talking in the last few years with so many. I think 1,000 bankers across Europe and across the globe, and in all honesty, they are extremely good experts and very good domain experts. But then when it comes to adopting things, it's very important to acknowledge that banks, especially nowadays, are extremely profitable. They bring a lot of profits, and in all honesty, the shareholders are very happy. This is why banks, they keep saying about all the time in marketing and or in different registers of their business and marketing. They always say we are interested in financial inclusion and so on and so forth. But at the end of the day, banks are really infrastructures to bring profit to the shareholders, and that is one of the key issues of actually being able to adopt new technologies. And then if Romania is different or not from the other markets, it's extremely different. It's extremely different, and it's very, very different. Each market is very, very different. It has its own particularities, and of course, globalization, it's impacting what is happening in different regions. But usually it's impacting it in a different way. And if you're looking to economies, if you're looking to how we have this crisis now with the elections and everything, that it's driving a lot of steam into and channelizing a lot of steam into different directions, and businesses are actually behaving differently. So in terms of digitalization, because we are very much exposed in Romania with the financial institutions to the Western markets, then there is a driver. There are some politics which are in place. So I totally agree here with my colleagues. And in terms of adoption, I must say that there are quite a few banks in my experience that are front runners in their own, let's say, in their own brand against other branches from other markets, and in terms of digital adoptions. And I see some banks that at the headquarters are actually becoming, Romanian branches are becoming advisors and examples to follow for the other branches. So from that perspective, that is very good. But let's not forget, Romania, it's a very, very small and narrow market from that perspective.
On this note, I would also like to add something on the first question, and I agree with Cosmin on this one, that actually we are different. The direction, yes, for sure, is the same, and I think most of the globe is heading towards digitalizations, and even in places like Africa and maybe more remote region and not so exposed to it. But for sure, it's different from timing perspective, where we are versus other countries in this and so on. And I think it's very different even within Europe, European countries. And even if we are to look in Romania history, remember that even just 5-6 years ago, in digital lending, one of the main issues was still like remote identification and frauds, right? And it comes from two perspectives, because the second reason is actually regulatory. If we are to look at the banks, if you look when banks started to engage more money and budgets into digitalizations, actually they were pushed by regulation initially, and then it came because of customers and the more market share based on technology and ease of access. So timing different in my opinion, but for sure the direction is the same. If I were to add a bit more on what changed in the last years in terms of the landscape of fintechs and how it evolved, besides speed that was discussed, I mean, 5 years ago, how long it took to take a loan, and now you can even take it in minutes. You have instant payments, so you can have the funds immediately transferred to your account right after you passed all the process. But besides speed, we have all the data, alternative data for credit scoring. We are now looking at creating scorecards based on behavior, digital footprints, etc. This was not a topic. And with this, I'm going to the difference between your question regarding the difference between banks and fintechs. Yeah, I think this is a very important one. I mean, even now, banks did make a lot of steps into digitalization. We have banks in Romania where you can get the loan exclusively online, fast. So they caught up with fintechs from many perspectives, but they still, most of them have traditional, credit scoring models and legacy behind that for certain reason. So I think this is a very important aspect that actually differentiates us from the banks. Second, and I'm going back to what Cosmin was saying, bureaucracy. It's banks are big, they have boards, they have many layers until you manage to actually engage an approval and budget for certain new product, new process, etc. It's really a lot more complex than in fintechs when it's very fast. Decision making process generally is fast. Yeah. And let's not forget one more thing that I would add on the table: product diversifications. Let's look a bit on a broader scale, BNPL, P2P, types of products that came from fintechs. Yeah, and here including, if we are to discuss about embedded finance, yeah, and the changes that already start occurring there. But I think that's more for the future. So
yeah, it's something that we should and we will discuss about technology. But before moving in the technology space, all of you have said things about regulation, and obviously this goes to risk assessment kind of decision making, let's say. So my question would be, what are the biggest obstacle in assessing online borrowers? You mentioned that the banks, they do have credit scores that are old-ish, some of them. But what are the obstacles in assessing the borrowers online?
If you don't mind, I would start with this question. Well, I'm not really I'm not really sure who the audience of the event is, but in any case, let's look to the solvability of whatever individual or for retail loans or for businesses in corporate loan. The risk it actually it's meant if you are able to give your money of tomorrow to give it back, and so that somebody will give you today your tomorrow's money, right? So basically, here there are different there are different ways to look into it, and I must say that online technologies and also Diana was mentioning it, that in fact applications and also banks digitalized and streamlined a lot of loan applications. This is of course a good step into user experience of the customer. At the end of the day, it's not really sure that having a streamlined process will give you more customer, because or you're not exposing your lending portfolio to more market. Why is that? Because at the end of the day, you have the same issue: who is able to give you back the money and how much of your potential customers will be able to do that. So if you want all these UX customer journeys improved, they are more into actually being able to capture more marketing and to bring more of the potential serviceable, accessible market into your pipeline. I give you the example of the banks in Romania. In Romania, there are 800,000 customer corporations active, and only 55 to 60,000 is the pool where all the banks are fighting for. So again, less than 10%. We're talking about 8% limited companies or whatever type of formation. They have access to, or at least they are in talks with the banks, and the banks are fighting for this pie. Meaning that at the end of the day, you can extend this. You can extend this, let's say, percentage with some new technologies. But these new technologies with extra layers like alternative lending, with other layers where compliance is not extremely tight. If you're not adding other options like, I don't know, Carmen, you were exposed to crowdfunding, but there is also the options of the crowd lending.
Yep.
If you're going into all these new methods, then of course you are able to access a bit more of these markets. Otherwise, we are talking about models that past economical performance of a customer in order to predict the future reimbursement capability, which with linear regression, the way it's performed today, it's still capturing most of the real potential of the market. Still, again, there are options to do it faster. There are multipliers that can be actually added into the option. I give you one example so that I'm a bit more specific. If you have a very good monitoring tool of your loan, even if you're a bank, then slowly, 1, 2, 3 years after you have that monitoring tool, then you're adapting your covenants and you're opening more when it comes to the decision of giving loans, because you know that you will be able to monitor it and to take some contingency actions before something is defaulting. So only by this example, what I want to say is that the market can be open even larger with new technologies and with new innovative ways to look into the credit worthiness. But in any case, yeah, I mean, it's very important to understand that at the end, there are also old methods that are able to capture the solvency of the customers.
No, I agree. Indeed, the crowd lending, it's something extremely, it's growing extremely well in Europe. It's a fact. So I've seen it, and it's even higher than crowdfunding, to tell you the truth. I would like to hear other opinions if you have, because indeed. It is a problem in our digital world, the risk management and also the regulation. And everybody, all of you said about regulation. What about the regulation? I'm in crowdfunding and investment, the same regulation. It's something that keeps us very busy, and it should be like that. But what is the impact of regulation and compliance on your credit decision making? Is the regulation helping you or not?
I think
Probably said not, but no, what?
It's both a blessing and a curse, depends on
Exactly.
the moment, right? I think on one hand it's good that the regulation is starting to be in place, and I know many moments even in our company when actually it pushed us to do the correct things and improve our processes in the end, and we are a lot more happy now for having for example, in our streams right now, pushed by regulation, we have all AML processes, all KYC, everything is automated. We have great integration with great partners, and this actually led to very fast decision making and better customer experience, right? But we had the push. In the same time, I can exemplify as a minus in regulation and maybe sometimes lack of progress of regulation. We all know that technology evolves actually faster than regulation. I'm not even going to touch the AI topic that you all know. Where is AI in technology, and where is the regulation behind that, right? But even let's talk Romania. Technology allows right now to be fully automated in entire funnel of lending either a business or a private individual. Actually, regulation doesn't allow you to do that yet. Although we, coming from technology, understand how reliable the data is, how certified the technology is, but compliance is a bit still behind on that. Yeah, so this is
I,
a minus.
I'll be short on this, so I leave room to my colleagues to comment on this. Well, regulations is wonderful. Regulations is wonderful. Why? I keep hearing a lot of people bitching about regulations and so on and so forth, especially startups. And being also vice president of Tech Angels, I'm encountering a lot of startups that are all the time complaining about the regulations. How can they cannot do innovation because of the regulation? Regulation is killing innovation. I have a different opinion. I think regulation is opening innovation. It gives a lot of potential and a lot of opportunities to startups and especially fintechs to help the big players. If you are to be a startup, if you are to be a founder, I think one of the least concerns is the regular. You have to be a hustler, so you need to understand how to hack into this stuff, and it gives you a lot of opportunity in order to build innovation and to help the regulated entities like the banks, for example. And one more thing, and that I'm closing with it. It gives us option in Europe to build resilient models. Because in US you have regulations which are for growth, and in Europe you have regulations for stability and sustainability and protecting citizens. And again,
Okay.
I know it can be cumbersome, and I know that it can be difficult, but founders should do their homework. They should look into it and take the challenge and you know, build innovation in a resilient mode.
Yeah.
When you say just a moment, when you say resilient mode, it's like doing stuff that goes across goes around the regulation, or to start to
No,
just go for it, and
no.
you'll
What
see
I mean,
there like an
no, no,
American,
no, no.
like go for it and we'll see.
No. I mean, any kind of innovation should be built in the R&D stage, in which you actually ignore the innovation, in my opinion. After you have a breakthrough, then you look into how to make it compliant, and if you have any blockers or anything, you need to work on
Exactly.
it. So
Okay.
in any
Okay.
case, you have to go through those stages. So for the startups, regulation in the first R&D stages, they should mean nothing. But again,
Yeah. You
you
don't
have to be
start with the
aware of it.
regulation.
Yeah.
Yeah. You
So,
don't
but
start
you
with
need
the
to
regulation.
be aware of it. So it's a different. That's why
Yeah.
I'm saying.
I agree.
It's very important that you have always an eye to the regulation from the day zero, because your DNA of your product or of your model, of your pricing, of everything that you're doing has to do with that specific regulation. If you were to build
I
a
agree.
resilient model.
I agree. Catalin, excuse me. Catalin.
Yeah, I'm sharing the same opinion like Cosmin. Regulation is a blessing, is not a problem, is not a blockage. I don't know, we don't know too much Romanian market, that's for sure. But what we know that from our efforts to implement, so we started with the bottom up approach. So when we start beginning with the solution for the business owners to connect, which connects to cloud accounting softwares, triggers the data, and then we see different behaviors, different decision driven by what. We did the research with Visa 3 years ago about this, and we identified that the sets of value for a small retailer, let's say for an SME, because we address only SMEs, are totally different than a corporate. And that goes back to, and those decisions are reflecting in and they have a consequence, and that consequence is that their financial positions when they do the reporting are not good. So that's why most of the banks flag those companies as unbankable. They cannot touch a loan. However, we figure out a solution in the last 2 years to challenge the market and then to show to the regulator that things may be different. And the data is, and it was a surprise for us, and because we
Good
didn't.
luck, Katarina. I don't want to interrupt, but good luck with showing to the regulator whatever
No,
you want to
meaning
show to the regulator. Yes.
meaning was difficult, and I saw the biggest problem around the bank side, not on the regulator side, because we show models how things are working why these companies are driven by certain decision. And the bank said, no, you know, by my scoring model, it's already built by PwC or Deloitte, wherever we paid a lot of money, we don't change now. And when we start to implement this solution and we start this process with the bank, and we talk here about the 460 million fund for SMEs for the next 7 years, only for one industry, which already unlocked. They said, you know, but the regulator doesn't ask you this, but our risk department wants it. You know, so we work also for Dubai government, where we do loan application and manage the risk assessment for local companies, where they have to fill out around, and they have to provide around 45 documents. Those are not requested by the regulator, those steps. The regulator requests 5 or 6, for example. But the bank, the issuer, the one who's taking the risk on the capital, is the one to make sure, he wants to be sure to know the client well. So I think the problem in the Romania is the same like everywhere, are the banks, which they want to be, they are not too risk adverse. And even in our efforts to sell, we saw that, and we showed them, for example, in the retail industry, that, guy, listen, you look at these financials of these companies for the last 5 years, they are losing money every year. But however, they are still in business. Why? Why these companies are still in business? Why they don't you lend? And those companies are the 85, you said 95, I would 90%. I would say generally like 85 of the SMEs are unbankable. They cannot get a loan because of this behavior, what they do, because of their values. Their values is to, I don't know, to make enough money to pay piano lessons for their kids, to have a vacation, not to generate profits and to open a new branch and to expand. And that's why most of the banks don't understand. We showcase it. After 2 years, we have 3 banks who adopted it. And then now regulators said, okay, let's test, let's drive, let's see what's happening. And if it's a good result, definitely we can have a second thought on the process. And I think the regulator, it's can be agile. Yes, can be agile, but you need to bring something on the table to showcase that things are working. And yeah, I think this is my...
Yeah, regulator can be agile in the FSA, where they copied the FCA from UK. And they have
I don't know the local regulator.
The thing is, sorry to interrupt. The good thing is that compared to a couple of years back,
I can actually, I wanted to ask to listen to Diana, because she was in Singapore previously. So let's hear her.
It wasn't necessarily about my Singapore experience, but compared to a couple of years back, when there was no discussion, or the discussion always happened between the regulator and the big banks, now we are invited at the table. Now startups also have access to the regulator and can show an opinion, can show a product, can show a solution. And even if things don't happen as fast as we may want, they still happen.
Or never.
Or never, it depends. But
give me one thing that happened, at least in Romania with NBR in the last 10 years, because I started fintech in Romania in 2016, and it's 9 years from then. In 2015, I've been to the MBR. It was Cinteza still in place for the surveillance of the bank. If you give me one example that happened, besides us actually thinking that being on the table, we count, then I would be more than glad to hear.
The thing is that it's not necessarily at the local level, because things happen at the European level as well, which we have to implement at some point. You have PSD2. You didn't used to have that. Without PSD2, you wouldn't have access to any kind of information within the bank. You couldn't initiate payments and things like that. And that happened because some startups were at some table at some point trying to tell the regulator what's supposed to happen.
She's right.
There's also another thing. The current banks, and as you've pointed out, the bank is actually lending the population's money. So my savings go to loans. So they have to be a little bit risk adverse when it comes to how they place that money and how they distribute it to the population, or to...
Heavily risk adverse. Heavily risk adverse.
It's a blessing. we have just 10 minutes, and really I want to discuss about AI, because it's something that everybody, and Diana, you are perfectly right, because of regulation from EU that we have to implement in Romania. Something is like moving a little bit in the right direction. And you are right, Cosmin, as well, but we have to work with what we've got, and as you said, to make it as good as that.
What I want to mention just in 10 seconds is that I was in working groups for PSD2, for PSD3, for AIX, for at the European Commission. We're working with World Bank. I'm kind of there. I'm involved in it.
Yeah.
But yeah,
I
just wanted Diana. I wanted to challenge Diana a little bit and say to let her say about this startups influencing, European Commission into this regulation. But it is nice. Yeah. It's happening
we have to
This
do
happened
something
in Singapore as well. So it's not, it was also the big players that would transform the regulation and not necessarily the small startups.
Okay, let's discuss because I am in the same with you in the same industry, so we can discuss regulation and regulator and what's good, what not good, I think, for hours. But let's discuss about artificial intelligence, how this will shape your industry. How do you feel it? What have you done? What you want to do? Do you want to use it? How fast? So there are a lot of questions, and I am interested what you are doing and how do you want to do it. How do you see AI and machine
Well, if
learning
you
and
want,
everything that we mentioned?
I will start. I will start with the pessimistic,
Okay.
note, and then the others will look. We're
Okay.
at Lendox. We're involving a lot of AI, and we started very early. And we from computer vision to machine learning to generative AI now with LLMs and everything. We are kind of covering all the spectrum from data capturing to enhancers and modulations and all kind of stuff. It is required because in a credit intelligence, important to be able to capture real time and accurate data, and then to be able to convey it into reasonable models. But what I want to say is that the development of AI, it's now 18 folds on 6 months. Moore was saying that any technology, and actually it was proved by history that any technology until now was going 2 folds at every 24 months. Now with Gen AI, we have 18 at 6 months. It's very, very difficult for the startups to keep up the pace. It's extremely difficult. It's almost unbearable. Now we have AI agents. Now, soon enough, AI agent will talk with an AI agent. You need to. So it's very, very difficult, especially because the capital required to stay above the curve is extremely is rareifying, in my opinion, for startups which are not really going to the deep tech of AI. So I think that what's going on now also in the United States with all these tech guys that actually started to get closer to government, it's one of the stages of actually moving towards a new era of AI agents and robots and stuff like this is shifting a lot. So if, in my opinion, in just few years, just in few years, things will shift a lot. And when it comes to the financial services, and then I will close with this. I'm not sure I will be able to enter one more time. I think that AI will also shift the way money look like, the way financial services are looking today. So everything that we are talking now, it might be possible that in 5 years will look totally different from perspective of compliance, from everything that we actually brought on the table currently. So yeah,
But that's a bigger view on. It's not just AI. It might be other things that you said. Maybe money. Maybe whatever kind of.
Quantum
Quantum
computing,
computing, exactly. Can be
AI
changed.
combined with AI with all that stuff. Yes.
And because we don't, not only you, we don't see, because it's very fast. We don't see we cannot have a strategy on a long term because everything is very like quickly changing. in this particular field, your field, you are using right now agents, I suppose, or you plan to use agents to in specific in what areas are you using it
Well,
in risk compliance?
in Lendox, we use agents from actually before generative AI was on the table. We started to build some semantic models. Just for the audience to understand, we were having a peer-to-peer lending platform previously, where SMEs were applying for loans, and then high net worth individuals were bidding for these applications, and also banks. So we had compliance, KYC, and then underwriting, and everything that we were performing. But then we realized that we have to hold hands all the time with these low financial literacy players like SMEs that they do not how to build debt readiness, as well as high net worth individuals that do not how to read the risk report. So basically, it was a lot of cost. So in order to depart with our models about behind the cost, we started to kind of build some AI agents to be able to them and understand based on their own logical metrics what they are against on how to build something. And this was the philosophy. So we were lucky enough to get some grants, quite a few million. And then we started to work with some universities from Switzerland, Holland, and also in Romania. And we built up 22 PhD and professors from academia, researchers in our team. And we started to build some proxies and some models in order to build semantic models. But then generative AI and LLMs actually came, and it showed us that the pace of such developments can be much, much faster. So we started to do also transfer learning and started to build also those. So when it comes to whatever we can do today, we are currently trying to do compliance and stay under the regulation, so that basically our processes and our technology is actually underpinning all the analytical requirements that are performed from sales to underwriting and monitoring of the loans of a lender. So basically, if a clerk, if an analyst had to perform some specific jobs, then our AI agent is doing that. When it comes to flagging a potential risk, then it's identifying some scenario, and then we are there involving some other models of generative AI, machine learning, and other topics. When it comes to capturing data from documents or videos or pictures, then we use computer vision. Then we have a moderator, which is also an AI. It's a generative AI, normative powers of the generative AI, and it's orchestrating which algorithms should be used, which kind of data, in order to return what result that makes sense with the regulator documented already product of a loan that we are talking about.
Okay.
So
Okay.
we are full of AI. But then we never know next month what is going on, and if what we have built and we actually spent in the last 6 months
Yeah,
is still available or abstract.
I think you are on your way, and I think you are one of the companies that are well on your way in terms of IE. So congratulations. What about how do you scale, Diana or Rucsandra?
We're also looking into an AI. We haven't implemented anything yet, but we're looking into the next stage of our app, because we are going to check the pattern of the behavior of our customers, and based on their behavior and then financial transaction and things like that, we will start recommending products that is best suited for them. But at the end of the day, we still rely on banks to do the underlying. We're not going to offer our own products, and we don't have the capability to start lending peer-to-peer or any kind of lending to the consumer. Because if you want to tailor to, I don't know, 10, 20 million people, you have to be a bank, unfortunately. There's no other way. And Revolut, for example, has showed us that he has to be a bank to be able to start lending on a mass scale.
True.
I think if I may add one thing in the remaining time, more as a concern, because I think Cosmin really nailed it. And so we can see that AI can have in every step of the way in lending, either it SME or private, or it's kind of, it will grow everywhere, right? The adoption can and most probably will be everywhere, right? But And we as a company also, even from last year, started already to introduce AI in certain processes in a more shy way and not aggressive way. But and we are in plan of increasing that into our the AI adoption in the risk models, the predictive models, and so on. But one concern that I would raise as topic for discussion: let's understand that there's no real legislation on this. We are investing money in adoption, investing money companies in development, and in 2 years from now, legislation will come and say, guess what? You can't do that, you can't do that, you can't do that, you can't do that. And we don't know that. And we have different examples or where and this brings me back to what I was saying. In legislation, the most big minus is the lack of it. If it's regulated, you know what to do, how to scale, you're
No, no,
safe.
no, no, no. I apologize to interrupt, but I think you're confused. We are in EU. We are the only legislation that we have a regulation. It's called AI Act. It started
I
in
know, I
August,
know.
and basically there is quite. Of course, it can be better, but at least there is a direction to that. So
Yeah.
Exactly.
To make
Plus,
you
it needs to be
compliant, but not
adopted
to
in
innovate,
local.
nothing.
It's not bulletproof. We have other examples of legislation that existed and they're being right now actually changed to be more detailed. Let's look at the consumer credit legislation for the people who know about that.
I
It's
suggest
still early.
innovate and then regulate on AI, you know. First innovate and then regulate on AI. Then the regulator will see what's happening. We at Prime Dash, meaning we eat AI on breakfast because we started, as Cosmin said, before Gen AI with building machine learning model. Let's rebrand statistics in machine learning at the beginning. And we use that because you cannot have a decision maker tool and let people take decision and to see the impact of certain decision if you don't use machine learning. So we started from there. We have a first project that is using completely an autonomous AI, which is built by Prime Dash on model, and it's automated lending based on transactional data on supply chain. So we provide only supply chain financing. We work on trade finance, and that will happen. It's happening automatically, even to a level of issuing a card. So the lending part and the card issuing having the full vehicle of accessing the loan and initiate payments on those loans. So it's a highly, extremely complex system. They use our system, but also we use Gen AI. Yes, 3 or 4 I think engines for AI, but mostly for document processing and nothing. Meaning we don't want to reinvent hot water, so we let people who do best do their stuff. But at this point in the supply chain financing, yes, we use our own engine, our own AI that we build. The bank is integrating our own AI and put on cruise control the entire lending process. But we are talking small loans up to $5,000, so not a big risk.
Not a big risk. Yeah,
Yes, in a
I agree.
very well assessed portfolio of clients.
Nevertheless, I don't think we have more time anyway. And of course, it will be the question: would machine learning AI will change the landscape? And I think Cosmin already said that it will be changed, and not only from the AI perspective, but also from others. So I'm sure that next year we can discuss again what are the changes in technology. So thank you very much. If you don't have anything to add, it was a pleasure to talk to you. And I'm very proud that I am in the same country with people like you that are doing such wonderful things. So Alexandra, will you take it from here? Thank you very much, guys.
Yes, thank you, everybody. It was actually a very interesting, I would say, even a bit fiery discussion. So I would say that if I were to take some conclusions from today, Romania is pretty similar to other countries, but maybe from a timing perspective, we're lagging a bit behind. We have understood financial institutions have realized that time is key, and in terms of digitalization and automation. And also, it was a surprise to actually hear regulation is wonderful. It makes us more resilient and build in a more sustainable mode, which is actually a good take on looking at things. But we still have to pay attention to maybe changing landscape and everything that may be coming ahead also in terms of AI and all the new technologies. Guys, thank you very much for being with us. It was a wonderful discussion, and we're looking forward to having even more like this with focus on the next countries coming up at UNCHAIN. Thank you very much.